Bull case target price for Nebius is $964. Let's see why. First of all, these are target prices at the end of 2026 fiscal year. So meaning basically Q4 that will be in 2027 released. So this is the first assumption. Then why I say that here a discounted cash flow is useless. And if you watched to my last Duolingo target price video, you may be a bit disappointed because there I used a pretty complex and accurate DCF model, even if it is not a standard DCF. So go watch the video if you want to know the details of how I do it with my 4 dimensions framework, valuation framework. Then in this case, it's useless. Why it's useless? Well, because Nebius may not print any positive free cash flow for years, maybe even 10 years. So normally the models that you use to model the DCF are over 10 years. You may have zero or negative free cash flow for all the 10 years, so net negative, and even zero or negative for the year 10. So as it is, as the words say, a discounted cash flow, you will get that Nebius value is zero, right? So it's useless, and we want to be like that. I mean, I consider so bearish if Nebius will print any positive free cash flow this year. Of course, will be catastrophic, but even over the next 2-3 years. Why? Because free cash flow is the operating cash flow less the capex. So Nebius is, I mean, the whole Nebius thesis, at least mine, is built on the fact that Nebius is building the AI infrastructure of the future, and it's basically it's basically an industrial revolution, meaning that you are going to spend hundreds of billions, trillions. So the free cash flow cannot be positive anytime soon. That's how it should be. We want Nebius to keep investing, to keep getting money to build whatever can be built. This is the first point. So most of the Nebius valuation from now over the next few years will be driven by demand-supply balance and the sentiment. So 2 factors, basically. One is demand and how Nebius is constrained to serve that demand. And the second one is, of course, the market sentiment. I mean, you may have a war like Iran war or everything that just depress the share price, not only for Nebius, but broadly for the market, right? So, I mean, these two are not, you cannot forecast, you cannot make any useful prediction on this, because they could swing so much from now over the next months and years. So, again, building a DCF model is pretty useless. So how I have built this, and I recognize that the fork is quite, the range is quite wide, but still you need just, I mean, when you invest in a growth company, I'm of the view that calculating a target price is completely useless. You need to have a few dimensions just to navigate your risk and more positioning, right? Positioning size, and so on. So first assumption for this model is ARR at the end of Q4 2096 will be $9 billion. So this is on the high end of what they have guided. They guided between 7 to 9. I think, unless, again, disruption in the supply chain, probably they could even higher this guidance to 10 billion. So I think 9 billion is quite realistic. And second is 10% dilution. So I am assuming they will be using ATM program that, if I'm not wrong, they have approved within the last quarter. They have shared it. And so I'm considering 280 million outstanding shares for this calculation. So how I'm doing this is market cap to ARR ratio. I think it's sort of proxy of P price to sales ratio, but I think it's more accurate because it's forward looking, right? ARR. While so for a company like Nebius that grow so fast, you if you're checking basically sales or revenue, you are looking at the past, right? Because actually what Nebius have already contracted is ARR, annualized recurring revenue. So let's use ARR. So market cap to ARR ratio. To bull case, consider 30x of market cap to ARR ratio. I think it's not crazy. It's not crazy at all. Probably it's something similar to what they are priced now. I didn't do the math, but it's realistic that if demand at the end of the year will still be strong, meaning Nebius is guiding like for, I don't know, a 5x ARR for 2027 fiscal year or something like that, so very so strong. Sentiment is good. I think it's perfectly doable to have a 30x market cap to ARR ratio, and it will give $964 of share price. So now how much is it? It's 200 and something. So it's more than a 3x. And maybe it is even a 4x. I don't know the exact number price now. Then you have a normal case scenario where market cap to ARR is 10x. Pretty conservative in my view, meaning share price is $321. Then you have a bear case where, of course, and these guys, just let me point out something. This, again, it's according to my thesis, right? So it's, of course, if my thesis is wrong, and read my thesis on lorenzo2cents.com or listen to my last videos. If my thesis is wrong, these prices are probably too high, but I mean, I'm of course investing according to my thesis. So bear case, consider a market cap to ARR ratio of 5. It's pretty low. You see that this share price is actually lower, slightly lower than what it is now, the share price. And I think this scenario is in the case that still, of course, Nebius keeps having the best product. Demand is high, but they are a bit constrained maybe in the supply. And so, and maybe there are even some external events that depress the market. Again, a war or a sort of, I don't want to see recessions because recession could be even worse, but pressure on the GDP for some reason, and so on. So in this case, the market could price market cap to ARR around 5, and we could see a stock price for Nebius that is basically more or less flat for 1 year. I mean, 9 months to 1 year from now. So all of this is no financial advice. I have a position, as you know, I'm up as of now around 4x on my position. So do your own research. Ciao.